All right, now markets may be slipping gently towards the day's low. What do we have from agencies? Let's look at it. Japan mulls gone. Fires. No, something to do with defense in Japan. Japan to mull next generation fighter exports to Australia and India. I had no idea Japan was making aircrafts. I mean, I used to always think that it's the Americans and the Europeans which in a sense are dominating the fighter jets. And you never thought through it. I've never heard anybody using Japanese aircrafts actually for combat. Japan is Japan. They're full of surprises. They're really full of surprises. Amnish Aggarwal joins us, Head of Research with Prabhudas Lilladher. Now, there seems to be this huge view in the market that time to revisit defense stocks. First, it was missile stocks, then shipyard companies, now drone stocks. Is there logic in revisiting defense stocks, or this is just hot air and that will also go away? What's your view, Amnish?
Hi, Nikunj. You see, as the situation stands today, one needs to differentiate between two things. First of all, there will be some sort of an excitement around defense stocks, given that the country is at war with one of our neighbors. Now, the second thing is that what will be the implications in the near term, medium term, and longer term? Now, if you look at the companies which are going to benefit immediately, say, for example, can you manufacture an aircraft overnight? Maybe the answer is no. Or a submarine, or you can say aircraft carrier, they take years altogether. So in the near term, the companies which are making, say, stuff which is related to missiles, companies like Bharat Electronics, which make consumables, radars, and systems which are used by Army, Navy, as well as Air Force, or some of the other companies which were more on the consumable sides, I think they are the ones who are going to gain immediately out of the present situation. In the longer term, we will have a situation where people have now started realizing that whatever initiatives were undertaken under the Make in India, you can say, creating a long, you can say, the back end and supply chain. So all these initiatives will be taken forward in future also to strengthen the overall security situation in the country. So in the near term, I think the biggest beneficiary would be Bharat Electronics purely in terms of numbers. But in the longer term, I think all the major leading defense companies are going to benefit. But having said that, in the near term, one should be cognizant of particularly how the valuations are and how one should play out on these stocks.
Drone attacks. I'm sure by now you and your team must have done work on which is a company which could benefit if the modern warfare is now moving from tanks to artillery to drones. Are there any specific companies which you've identified which could be indirect beneficiaries of what's happening on the geopolitical front?
You see, as I said, currently we are covering 3 defense stocks. Your
drone
HAL
specifically,
is there.
anything on drone specifically, which is not in your coverage area, but you know they're doing the right things.
See, you can look at, say, companies like, for example, Tega is there. If you look at, say, specifically drones, so I recall there are, say, a couple of companies which are listed in India, but not someone which is very, you can say, specific to the current situation. Because the drones which are being used today by, say, your Indian establishment, they are more like Israeli-made drones. So I don't think there is an immediate, yes, there could be some companies supplying components or warheads and all that, which might benefit companies like, say, Bharat Dynamics. Okay, but otherwise, no specific drone player I would be able to, you can say, figure out at this point of time.
Through the markets right now, we are gliding towards the day's low. Amnish, somewhere do you think we should all be very happy and delighted? And when I say, I'm just talking about the market reaction here. No one is happy with what's happening on the geopolitical front. I just want to clarify that. But do you think from a market standpoint, the resilience has been excellent, and it has been quite encouraging that there has been no fall in the market?
You see, I would look at it in 2 ways. Whether, first of all, we are going to have a, say, short war or long war, that is first question, which we or the market needs to address. And the Second thing is what could be the financial implications for that. Now, even if we have a short war, say for the next 3 to 6 months, we are going to get a hit of this definitely. Now, why the Indian markets today seem to be more resilient is the fact that, say, as we discussed last time, that the rally in Indian markets were far lower than what it was happening in some of the other markets. And as of now, based on whatever the situation is, people are of the view that it will not be long war, and the, you can say, the impact on the economy or the loss of material infra or anything is not likely to be very significant. So till the time the market is in this kind of a mode and we don't have any big negative news coming, so I think that is what is reflected in the moods of the market today. But I think the situation is quite fluid and we need to be very careful for the next few days.
I just want to get back to the defense pack because, you've got a BEL which is holding up so smartly. This has been, of course, a traditional favorite. So has been a Cochin Shipyard, a HAL, etc. But if you were to buy any of these stocks afresh, where is it that you have valuation comfort?
I clearly see a possibility of earnings upgrade coming in BEL, particularly for FY26. Because they are the supplier of the maximum number of consumables to, you can say, Indian defense establishment. Over the medium to long term, will now the numbers of the order books, etc., for whether it is Cochin Shipyard, Mazgaon Dock, or HCL improve over a period of time? The answer is yes. So near term, Bharat Electronics will benefit. In the longer term, they will benefit. And I think whatever is happening, the fancy and the P multiples of these stocks will remain quite healthy. Bharat Electronics, I think, if someone wants to trade on what is going to happen in the near term, to me it seems to be the best and the safest stock at the present juncture.
Okay, just looking at the construct of the market today, and of course there's Titan, there's L&T, there's BEL. These stocks are all holding up very well, and then there's Tata Motors as well. And Amnish, clearly, Tata Motors has been a laggard in terms of some of its other peers like an M&M. At least so far this year, we've seen that play out. Now with this UK, India and UK, USA FTA getting signed, how much of a fillip does it really turn out to be for Tata Motors, especially when it comes to JLR and Land Rover?
I think that is what is reflecting in the strong bounce back in the stock. Because, for example, if you import today any vehicle from JLR, the duties are, you can say, very, very low. Although India, if you look at the average price of those products and the size of the market, it might not be that meaningful as of now. But when it comes to the export from particularly UK to US, that would be something which is very significant. And given the fact that they have got very, you can say, favorable situation over there. So I think that is something which is getting reflected. And given the fact that the stock had actually corrected by 30 to 40% from the peak, the stock is actually now gaining ground. And if the demand in the US remains good and they are able to capitalize on the low tariffs, I think this stock would have more legs to move.
There's a lot of news coming in, and I'm going to stay with this, please. This is source-based information which we are picking up from wires. Amnish, you may want to pay attention to this when I speak and when I read it out. India is asking US for exemption from all and future amid tariff talks. So there are two parallels in the market. One is the geopolitical tension. You may use the word in small, war. And second is trade war. India offers to slash tariff gaps by 2/3 in a dash to seal a trade pact with the US administration. India offers to slash tariff gap with US to under 4%. Under 4% from nearly 13%. India offers zero duty and 60% of tariff lines to US with 3% tariff lines now under potential pact. Now, what do you import from US? Let's bring that list out and put it on television. Well, you import energy, you import defense equipment, you import medical equipment. What else actually? Gas, energy, medical equipment, agriculture commodities, which I think is tricky, and the big change here would be for importers who would, so energy does not change anything. Why? Because in energy in India, as it is, you import anything, you import from Middle East, you import from US, that's more like a government or a bilateral decision. But in terms of individual companies, there are high import entry barriers in the car sector. For example, Tesla 110%, motorcycles very high, especially Harley Davidson. Then very high tariff barriers are there on medical equipment. Stent, which is used by heart patients, MRI machines, CT scanners, large equipment or medical equipment which is made in US currently in India attracts a lot of import duty. If that is changed or slashed, I don't think it will have serious implications, because there is very little import substitution which was being done in India because of duty protection, excepting stent and maybe some medical devices. But barring that, nothing much. Agriculture, I'm not so sure if something will come. Is the US president speaking somewhere? Do we want to cut across to it? I mean, is there something fresh which is coming up, or this footage? Guys? Okay, are we cutting to it or this old footage? Okay, this old footage, beg your pardon. Okay. Amnish, how do you want to react to the flashes which are just coming on the screen?
Yeah. So, Nikunj, as you rightly dissected that what we actually import and export from US. So when it comes to imports, we are importing energy, we are importing medical equipment, then a lot of, you can say, defense equipment. And you see, all these things, we will be importing either from US or from some other country, because you are not manufacturing it over here. Now, the tricky thing could be only two items. One is agriculture and another is dairy. These are the two items where India had very high duties, and where it is not now, right from the time of WTO, when it was formed and the agreement was signed. These were the two areas where there were a lot of, you can say, disagreements on Indian subsidies to agriculture and the kind of tariffs which India had imposed to protect its farmers as well as the dairy farmers. Now, for example, you look at, say, Harley Davidson or a Tesla, all these premium products. So they are not the mass items in India. So even if you slash duties, will you be having a condition that, for example, you sell, say, 2 lakh your Harley Davidson over here? The India is not a market of that kind. So to the people in general, is it going to have major impact? Is it even going to disrupt a your Royal Enfield? I don't think so. So where the things could actually become material for India is that even if you slash duties on some of these premium products, none of the companies is going to get a big hit. That is one. And when it comes to the export side of it, if we get some concessions, say, for example, whether it is textile, whether it is gems and jewelry or some of the other segments where we are competing with some of the countries which had got the concession duty or otherwise, we could gain. So I think even if you can say the taxes on some of these items are reduced significantly, there is nothing much to lose as far as India is concerned.
Data here, and this is from when the tariffs were first announced, which is back in April 2nd. We should get a reporter to try and get more details on this, and then, of course, get our researchers as well to try and analyze the individual sectoral impact. So it's PVs largely, like Nikunj was highlighting, because the US import tariff is 2.5%, while India did impose a 70% tariff on US imported vehicles. Network switches and routers, India imposed a 10 to 20% tariff, whereas US imposed none. There was agricultural products, wherein apples, Nikunj, entered duty-free into the US, but India imposed a 50% tariff. And there is rice in husk, wherein India levied tariffs up to about 80%, while the US rate was under 3%. So that's the data at least I have as of now.
There is a gap of about 13% if you look at what India exports to US versus what India imports from US. What is India's largest export? Keep services aside, it is pharmaceuticals. So that's about 10% base traffic what you have. Now it could go to 26, but pharma actually has been exempted. What is the idea of this entire trade imbalance, trade rebalancing, is that US does not want to have a trade deficit. The trade deficit can easily be curtailed by increasing exports from US to India. That could happen in the area of defense. That could happen in the area of agriculture. That could happen in the area of, let's say, gas, energy, large items which in a sense US is either capable of manufacturing or they're naturally best, which is an area of, let's say, gas. You can easily import from gas instead of getting from east. You further go down, get from US. Those things are manageable. However, if the tariffs in Indian merchandise export remains low, that means for pharmaceutical, for gems and jewelry, for garment, after the US FTA which has been signed, I mean, these are big deals which are happening. Just imagine.
So there was textile and apparel, wherein India exported over $8 billion in textiles and garments to the US, and this is data as of 2024. There's pharmaceuticals and APIs. And of course, it's largely exempt under the executive order, but medical devices, like you said, was not covered by the exemptions, and they were up until now at least impacted. We're actually just waiting for any confirmation. This is just source space info that we're picking up from the wires right now. And then, of course, there was information technology, electronic components, smartphones, routers, switches, which of course is a very, very big and growing segment. Agricultural products. India exported fish, shrimps, non-basmati rice, vegetable extracts, and of course oils as well to the US, which was worth about almost $5 billion. And then automotive components and two-wheelers, which were of course exempt, but there was of course high tariff there as well. And when it came to IT and electronic components, which of course is the very growing sector, US imposed 0% tariff on similar items, while India was imposing about 0 to 20% tariff. So largely textile and apparels, pharma API, agricultural products and electronic components. And of course, automotive components and two-wheelers as well is largely the big sectors where this news would be sensitive to.
See, Aisha, what will gain automatically, I think, would be pharmaceuticals. Because this whole entire, sword which was hanging on the sector, that could then become 25 or 30. That concern completely fades away. That's one large component. What may go down is, like stents. In India, there is imported stent, there are local stents. I mean, medical equipment, those CT scan machines, MRI machines, which actually, right now having a large duty. Then Tesla, 110% duty, some compromise will happen there. Harley Davidson, like, Amnish was saying that, look, it's not going to be, there's only one model of Harley Davidson that also is about 4.5 lakh rupees. It indirectly competes with Eicher, but that's not like the main appeal for Harley Davidson, that they will come here and they will eat into the market share of Hero and Bajaj, because those are different utility bikes between 110cc, 115cc, where Harley Davidson is actually not present. Amnish, can I say that the go-to sector now could be pharma, at least Indian pharma exporters? Because if there are trade negotiations which will happen for Indian pharma companies also, they should get some advantage now, and fear of a tariff goes away for them.
You see, the fear goes away, but will they incrementally be get anything in terms of, say, low tariffs or increased market access or not? I don't think that is going to happen. Yes, you can say the sword which was hanging over them, that the tariffs might go up, they might be on the receiving end, so that goes away. That is one. The second could be, I think, the apparel side, because India, when it comes to US, we are strong in the home linen and home textiles, but in apparel, we are not that strong. So I think that could be one segment where we could gain. Pharma would be more like, I would say, business as usual.
Another sector which I think is very local, and I'm just going to change gears from drones to tariff to India. Cement. Why are cement stocks doing so poorly? I mean, this is one sector which was supposed to make a comeback. This is one sector where things are looking up. But if I look at cement stocks, nothing happens there.
You see, I think this quarter numbers were per se not bad. For example, you look at, say, all the leading companies. So there was some sort of a bounce back which was visible in the numbers in these companies. But somehow if you look at, say, the past couple of years or past 1 year, the theme around these companies has been that you will be using renewables, you will be having more efficiencies. So all that is going to give you incremental margins. But now, if you look at the history of this industry over the past few years, they have been able to hold on to some of the efficiency gains, but the price increases, they have not been able to make in a very, very proportionate manner. So unless and until we see the profitability of the industry improving significantly, I think there is very limited scope for re-rating to happen. And from here on, I think one can expect only some sort of a secular returns to come. And in the near term, I think this could be one industry, because in the near term, the focus on incremental construction and all that. So I think that can even take a little bit of a backseat.
Point makes sense. Amnish, great to have you today on the show. Thanks for your time as always.